Talking about the commodities here, if you're actually looking at the jet cracks, again, those actually are increasing and actually are at present at multi-year high levels, negative for the aviation stocks here. If you're looking at the diesel cracks, again, that's a good positive sign for the refining companies. Between petrol and diesel, so far, again, diesel cracks actually have been very strong in the last almost 3 months here. So keep those from the perspective of refining companies, and again, companies which have higher diesel in their slate, Reliance Industries perhaps one of them, again, those actually could be benefiting because petrol cracks are not rising that much the way diesel cracks are rising. So that's a mixed take coming on the crude and the entire cracks here. But now let's continue our conversation on oil, gold and the base metals and what perhaps you should be watching out as a trend on all of the commodities here with our guest today, Vijay Bhambwani, the author and CEO of bsplindia.com. He joins us in the studio with me. Welcome to the show, Mr. Bhambwani. And also, let me introduce Sumit Bagadia, the Associate Director at Choice Broking. He joins us live from Mumbai here. Welcome to the show, gentlemen. And Vijay, first of all, coming to you. Oil prices, as always, again, we have talked last time, and the trajectory remains positive. $80, those levels actually have also come here. How's it looking to you right now? And the important question here is it a time for a pause, a pullback, and then again going into a buy, or you think perhaps there is no pause here, one can still go on buying crude here?
Good afternoon, Piyush. As always, thank you for having me on your show. In the larger sense of the word, remain positive on crude as I have been for almost 8 months or 9 months now on your channel. And I also reiterate my view that where oil market rally is concerned, it will continue to move up in 2 steps up and 1 step down manner. And over the last 7 or 8 trading sessions, I have seen a little bit of unwinding of long positions by the savvy players at 72 plus levels on the WTI. And as you near the round figure mark of $80 a barrel on the Brent, I am seeing a little bit of unwinding, but this is by no means an indication that the upthrust is over. This is smart money taking in some profits only to deploy it back at lower levels. So I don't really see the crude rally having run out of steam completely, but the larger picture of 2 steps up and 1 step down will ensure that there is a little bit of a decline before falls are likely to be cushioned by being bought into.
Right, so that's the view coming here. Perhaps, a follow-up again. So are you indicating that perhaps at 4871 around M6 again, plus minus 20 points here and there, if this is a level perhaps we are actually standing right now for M6 for our viewers, does that imply that perhaps some pullback could be expected because there is some unwinding happening? Would that be a prudent idea again, and after that small dip, and if that dip perhaps could be coming, how much that dip could be coming? And then will that actually area be again sort of area for buying here?
Piyush, if you look at the intraday volatility in oil, I mean, a 2% move in oil on an intraday basis is now taken as the new normal. So can a 3 or 4% decline in oil occur over the next week, fortnight, or maybe 3 weeks? Yes, I think so. Will it get bought into? Yes, I'm willing to bet on that. So on the MCX also, a 2-3% decline is not something that will actually ruffle my feathers. If you were to take some profits, you might just get lower levels to get a hitch on to the long bandwagon again, which is what savvy traders are doing since the last couple of months.
But let's also talk about the natural gas prices. If I take a look at the LNG prices again, there is no very close correlation between the LNG and natural gas here. But then if I'm looking at the LNG prices, continuous spike, another sort of a new high level has been created. And that has been the case for the last almost 6 months now. Natural gas prices, some sort of hike has happened. Around $2.8, $2.85 again we have seen in the US markets here. So Vijay, what's the take on natural gas prices? And I know weather is a very good important wild card here, but given the fact a small rally has happened, are you bullish on natural gas like crude oil here?
Not as bullish. I wouldn't allocate as much assets to natural gas positions. On the MCX, as in the overseas markets, your cost of carry tends to be relatively exceedingly high as compared to crude oil prices. And natural gas is more of a wild card and a high beta commodity as compared to crude, which itself has become high beta now. Having said that, I think the 180 levels on natural gas is now appearing to be a short-term base which has now been created. and declines, if any, to that level, I think will see the bulls coming back and enhancing their long positions. So I do feel that oil will tend to pull natural gas prices higher, though not in lockstep, not exactly in the same percentile movement, but there would be a rough and ready correlation between crude and natural gas for now.
Now let's actually get the same comment, the same view again from Vijay here. Vijay, gold and silver, interesting trade again. We saw the sort of gold reaction to the dollar here, but the last time when the dollar index was actually attempting 93, break above 93, and then again we were expecting perhaps this is the time when it's going to break out, and did not happen. But the gold was not breaking actually below $1,300 here. This time it has broken below $1,300, and now actually we are seeing MCX gold around 31,000. So what's the view right now? Is it something like next week perhaps looking safer to short here on every rise here? What's your view now on gold and silver both here?
Piyush, we by our constitution in our company don't tend to take very micro hourly or intraday moves. We'd rather look at the longer picture. So having said that, I've said 2018 calendar year or even the Samvat year in your Muhurat session is likely to be a year of silver first and then gold. So we are looking at declines which would be relatively low risk buy opportunities in precious metals, because there's going to be a pull and push on bullion. Number one, you're going to see a strong dollar because of flight to safety, acting as a downward pressure on gold prices, because gold and dollar tend to be inversely related. On the other hand, rising crude oil will basically push up inflation, which is positive for gold prices because there's an absolute positive correlation between crude and gold. What will depend on whether gold is going to go up and go down is whether crude is rising faster or the dollar is rising faster in percentage terms. So like I've said, crude oil is likely to see a temporary cool down a little bit, and the dollar is likely to see a short-term spike up. You might just see a % or 2 decline in gold. I think that would be a good enough time to start to sink your teeth into small mouthfuls. But having said that, I think in percentage terms, silver is looking a lot more interesting. The more you go for solar energy, the more you need to put silver into those photovoltaic cells. So relatively speaking, percentage return on investment could be slightly higher in silver.
Right, interesting take here. So that's actually the word coming here. So another 1 or 2% that actually is becoming an invitation to buy. So maybe if you're looking very short term, maybe 1 or 2 days, some weakness I think is on the cards as our guest is indicating. But perhaps for gold, again, as Vijay was saying, that again could be a sort of invitation for entering gold prices there. In fact, gold sort of positions there. So having said that, again, if that's the view on gold and silver, Vijay, again, what's the view coming on base metals here? Largely very sideways trade over the last few sessions, again, base metals. It just appears that perhaps traders have put the entire focus on oil and gold here. On base metals, perhaps any topic if you have, if anything you like in terms of base metals here?
Piyush, like I said, we rarely change our stance on a day-to-day basis. So what I have been saying throughout the year was our number one pick in industrial metals would be nickel. And look at how it's outperforming its peers, head and shoulders above the others in terms of percentage returns. I think nickel is likely to surprise traders on the upside. I would also foresee a very small probability of a bear squeeze on nickel, because I've seen shorts getting added on to the upsides, and beyond a point, the short sellers are likely to feel the pain of mark-to-market positions, margin calls, and possibly even cover their shorts, leading to a spike up in nickel. The other base metal I would watch is Dr. Copper, the bellwether of the economy, the tin roof of the economy. I would see a ascending triangle on the long-term charts of copper, but for a confirmation, I would want a minimum of 4 to 5% upthrust from here before there could be any meaningful moves on the upside. So we are waiting in the wings to initiate longs in copper, subject to a breakout. But nickel, I think, is already there.
I want to actually have your view, Vijay, on one of the, again, news flow actually which we saw. And that again basically that in terms of forecast, the global nickel market again, this is again the study coming from International Nickel Study Group here. The deficit again for this actually has been forecasted to widen to 15,700 tons from the last time forecast of 6,600 tons. This actual deficit number sounds quite positive. I think it sounds music for the years of bulls there, for nickel bulls there. Vijay, again, what's your own sense again if this is sort of deficit increase here? Ideally, again, nickel prices should have actually started again going back to the levels where actually it was when the last time we're talking about an aluminum spike here. At that time, there was a sharp spike in nickel here. This time again, it's a very gradual, very sort of tentative up move which is happening in nickel here. So, what's your view in terms of deficit numbers and in terms of the way again trade is happening in nickel here?
I'm enthused by the fact that there is a deficit, and let's also not forget what happened a week or 10 days ago in Malaysia. Dr. Mahathir Mohamad is back in power, and that's likely to see him go head to head with Indonesia, which is a substantial exporter of nickel in the region. And having said that, I think there is also likely to be reopening of trade negotiations, and therefore you're likely to see fresh announcement coming in from Indonesia about the nickel exports, which is what savvy investors or traders in the commodity markets who have a long enough experience in their belt, under their belt for trading commodities have already factored in, which is why you're seeing nickel trade at 4 digits now. I do feel there is upside left there, and the deficit, like you so rightly pointed out, is music to the nickel bulls' ears.